Roughly 1 week ago, we saw the continuation of the yen carry trade unwind, which triggered a significant decline in the NASDAQ by way of 3.5% and the S&P 500, which plunged 1.4%. Cramer identifies the epicenter of the damage as Japan, where a 12% decline in one night on the Nikkei was the worst since the crash of 1987. Jim Cramer advises investors to remain constructive and optimistic during the market sell-off. He warns that it's impossible to gain until sellers have finished unwinding their trades. I'm here to tell you that the yen carry trade is about 80% done, and if you bought the dip last week, congratulations.
Crash of 87. That jumping was related to overextended money managers who got caught with their pants down when the Bank of Japan decided to raise interest rates. These fund managers had borrowed money to make bets worldwide, so they got crushed worldwide, including here, when things went against them, and they couldn't come up with enough capital to satisfy the margin clerks. And there's nothing more dangerous than owning a stock that your fellow shareholders are being forced to sell. We don't know when they're going to be finished, so it's so hard to call a bottom. Unfortunately, this market can mount a real rebound. It cannot do that until we know these sellers are done unwinding the trades. And that's sometimes, including this time, it's impossible to gain. Hence our cautionary constructive approach tonight on Mad Money. Second, you have to analyze what people think is wrong, because it's important to know what they are blaming. I call this the pin the tail on the sell-off, even though I may not agree with it. So often the money managers set the tone are actually acting on mistaken information. But they run a lot of capital, which lets them control the discourse, even if they're knuckleheads. There are 3 reasons why these ill-advised people are selling. Reason A, they think the Fed screwed up so badly last week and they should have cut rates and cut rates hard. These sellers argue that the Fed should have realized that the economy was weakening, that consumers are on the ropes, and employment has slowed, as we know from Friday's jobs report. While I agree that the Fed probably should have cut, I honestly don't think a quarter point would have really mattered. Believe me, if things get truly ugly, well, guess what? Jay Powell will cut rates. He is not an intransigent, stuffed animal. He's a living, breathing Fed chief who's got horse sense. B, in the wake of tech earnings, there's a widespread belief that the Magnificent Seven are hopelessly overvalued. I think that this one's already overdone in some cases, depending upon which of the 7 you're talking about. As I see it, Meta deserves credit for having a real return on investment of AI. Apple had a terrific quarter. In fact, Apple's been able to take advantage of all the money Microsoft's spending on AI, putting Microsoft's platform to work for its customers for an undisclosed sum. Sure, I know, Amazon. Okay, not a perfect quarter. They said the customers held back from spending because they're distracted by our wild political situation and also the Olympics. Now, maybe Amazon's wrong. But they are not dissembling, people. I trust them. I trust their reasoning. They've actually never bagged me. Also, I'm not giving up on NVIDIA just because an article said that its latest high-end semiconductor iteration called Blackwell is late. They're in quiet period. They can't defend themselves. My information is that nothing has really changed from what management said at the beginning of July. Blackwell will ship in volume in the second half. If that's the case, well, we won't notice the delay. Plus, at these levels, I think NVIDIA is a buy even if the new chip is late, because the demand for the current chip, the H200, is insane. Still, the rumors are swirling that Blackwell, the device, runs too hot. We won't get clarity until NVIDIA reports at the end of August, which is a mighty long time for this great company stock to be in limbo, so do not be aggressive. Let it come to you. It is coming down. Reason C, why people are selling. Warren Buffett sold half of his Berkshire Hathaway share in Apple, something that couldn't be predicted. He just extolled his virtues back in the May annual meeting. Did something change? We don't know. Given that Buffett's a huge shareholder, still, by the way, peerless reputation, it is freaking people out that the guy's dumping half of his position. You know what? It did cause wholesale dumping in the mag stock itself, even as the company's got a tremendous runway for the rest of the year. I say for the moment there are no tech safe havens. If you're going to buy slowly and in small increments, in pyramid style, please. Remember, I disagree with the Bears on this one. I think Apple should be owned, not traded. Same goes for NVIDIA, believe it or not. But I recognize their stocks are still way up, and many investors just want to take profits while they have them. I'm not blind to the weakness in both. They can fall further. They probably will. If you can't take the pain,
the house of pain,
then get the heck out of it. Now, after you identify the epicenter of the sell-off and how investors are justifying it, you need to figure out what you can buy that's outside the blast radius. We must always remain constructive and opportunistic, even with our eyes open now. Many people believe that because we've gotten some weaker macro numbers, we're going to have a recession. You don't have a recession with 4.3% unemployment rate. It's historically a ridiculously low number. You don't have a recession when the economy is still creating jobs and there are no big bankruptcies. To me, that means you can actually buy the banks. Yes, I know Warren Buffett is selling Bank of America. That does not mean you should get rid of the banks. It may mean that they've been trashed for no reason other than selling. That's a good opportunity. You know what? I like the stock of Morgan Stanley for my trust. It's got a 4% yield. I think there'll be more acquisitions and IPOs in the next year. This one folded like a cheap suit in the last 3 days. Hideous action. It could kind of end here, the selling, with a high yield, lower yield environment. It's worth a try. You can buy stocks that yield more than 4%, take advantage of the sudden decline in interest rates, which makes high-yielding stocks the best game in town for income. Hey, you know what? Stay tuned. I've got some others to buy. Fourth, make sure you have ample cash to take advantage of the next decline if there is one. I believe there will be. You need to sell the bad to fund the good. You do not want to sell the good to fund the bad. We know that it's time to put money to work, but we still haven't done anything for the charitable trust. That means that we've cut down our cash position. Not yet. We don't want to put too much money to work at one level. We did not put net new money to work today. It wasn't enough. It wasn't low enough. There's still room to fall. We don't know if the panic comes back. We don't know what's going on in Japan. We had a fear level above 65 this morning as measured by the volatility index, or VIX. We haven't had that since March of 2020 and the height of the COVID panic. I think we got to be ready for more fear. Fifth, the market needs to get really oversold before you put a lot of money to work. We aren't even there yet. We weren't even negative on the S&P oscillator I follow until today. It went out tonight at minus 2.47. That's a start. Buy something here, you have to be prepared to buy more into weakness because, well, the liquidation continues. I would be, let's say, circumspect. I would be more comfortable with a minus 5 reading as a sign of a viable panic, not minus 2.47, maybe early. Finally, we need to know if there's anything moving that we just can't see right now. I don't see it in America, the commercial real estate market. I think that fear is overdone. You have a presidential race. I'm not worried that a Harris administration would be anti-business. Her advisors include real business people, something President Biden never embraced. However, she does favor a much higher corporate tax, and that's not even, no one's even talking about that. I don't see any big bankruptcies or disruptions to the system. Nothing that is systemic. We did have excellent earnings tonight from CSX, Palantir, and Lumen. The last one's a real shocker. Those don't jive with the negativity or the recession thesis. We do have a lot of earnings coming up. Hey, these could be telling. Caterpillar, Builders First Source, Uber tomorrow morning, Airbnb, Supermicro tomorrow night. They could all impact trading. So could Shopify, Emerson, Robinhood, Wednesday, Eli Lilly, Datadog, the Trade Desk. They help customers place web advertising on that comes up Thursday. That could be make or break for Google, which lost a suit about an antitrust suit today. Any one of these stocks will be used as part of the prism of recession, no recession. But the bottom line, if we check every box, we recognize that this hideous decline will ultimately, that's the operative word, be more of an opportunity to buy than a reason to sell. Then you should put out your shopping list, get ready, start picking at your favorite names. We are doing it for the Investing Club in good time. You should join just to see when we think the coast is clear. We haven't yet. Remember, you only want to buy the stocks that you'd be willing to buy more of on the way down. Otherwise, I can tell you right now, you will get blown out in disappointment and anger. Let's go to Regina in Florida. Regina.
Hi, Jim. How you doing today?
I'm doing well, Regina. How about you?
Good. Okay, my question is, I'm a long-term investor, and I own Intel. After last week's report, I'm down about 35%. My question is, should I sell and reinvest into another stock, wait for it to go back up?
You should sell Intel.
Or hold?
You should sell Intel. They have no credibility whatsoever. Their balance sheet is miserable. Could it bounce? I mean, you could sell half tomorrow and then hope it bounces to 23, but that's what you're going to get. And I owe you, Regina, to say that. I can't just say, you know what, it's fine, because I don't believe it is fine. All right, let's go to Joe in my home state of New Jersey. Joe.
Hello, Mr. Kramer. I want to let you know surf fishing at Island Beach State Park's been pretty good, catching a lot of fluke keepers.
The fluke are biting. The fluke are biting, okay? I caught a porgy the other day. I had to throw it back. My wife says you can't hurt a fish. Next time I fish, she better be canning. I mean, if she's canning, maybe I can catch something. What's going on?
With Scott's Miracle-Gro at near highs with better than average price targets and a nice dividend, is it a buy?
Okay, it is a seasonal product. They had a good season. It yields 3.7. They do have, by the way, some very environmentally friendly stuff these days. I say it's too high. It sells at 26 times earnings. I can buy high-quality tech at 26 times earnings. I'm going to say pass. Let's go to Thomas in Georgia. Thomas.
Hey, Jim, big shout out to you and your entire team that works for the Investing Club from the bottom of my heart and the top of my birthday statement. Thank you for all the work.
Man, we are cranking the stuff. You need help. We are there to help. Let's go to work.
Yeah, today in particular, lots of comfort coming from you guys. Hey,
thank you. We tried hard.
My question's about UPS. I'm a longtime shareholder. It's one of my core positions, and I do trade around that core position. My last sale was back in 22 at around $230. I haven't really wanted to add to it as it came down and down and down, but now it looks really attractive. But you're fond of the old adage, when the facts change, I change my mind.
Right.
Is UPS not the company it once was, or is it?
Thomas, it is not. It is not the company it once was. FedEx is a better company now. I've always liked the stock of UPS, but I cannot recommend it. Now, it's very interesting. I couldn't recommend UPS. I said that Scott's Miracle-Gro is too high, and I said Intel must be sold. So I guess I am part of the group that sees that things are wrong, not that things are right. But we're going to be patient, and we're going to get there. Constructive criticism of this market is fine. Days like today tend to scare people away from the market. That's what happens. We get these days every year. There are some like this. I need you to think of what this will ultimately be a buying opportunity. Emphasis on ultimate. But I know that it's too soon so far, and people are going to sell. If this market goes up at all tomorrow morning, they are going to sell right into it. All right, on Mad Money tonight. In a downturn like we had today, your biggest enemies are your fellow shareholders. I'm sharing where their mindsets are. Then we're all about finding opportunity in the face of panic. So with the 10-year now yielding below 4%, you know what I'm doing? I'm finding stocks that yield above 4%. And I give you that they will have peace of mind in a market meltdown. Hey, Mike, speaking of yield, I'm seeing if Tanger, SKT, could be the right REIT for your portfolio in this environment. I'm very attracted to it. We have the CEO on. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
I prepare like no one else so you can be prepared for any market.
When bears growl at the market.
I know you're tired of it, and I'm tired of it, but get used to this sound.
Cramer roars right back.
It's abundantly clear that right now it feels like no price is safe enough to buy.
Stocks may be down, but Mad Money is never out.
My mission is to make you money.
Stick with Cramer, and let's find your portfolio's next big winner together.